Well, David Taylor is here with all the local business news. David, now no surprises on the interest rate front this afternoon. Did the RBA say anything out of the ordinary when they made the announcement this afternoon?
Not really, not really. It's amazing. We have this big focus at 2:30 Eastern time. What are they going to do? What are they going to do? And then they do nothing. But as with anything like this, a rates on hold decision is news because financial markets take bets one way or the other. So money is exchanged and it does affect our currency. In fact, the dollar went up from below 73 US cents to above 73 US cents and there was no interest rate decision change. So, well, there was an interest rate decision, but there was no change, if you get my drift. So it's very interesting. But what they do say, it's a chance for, I guess, the brightest economic minds in the country who sit in Martin Place to tell us what's going on in the economy. So that's one thing we can take from it. And indeed, we understand that growth is subpar and it will continue to be subpar for a little while. Unemployment remains steady and inflation is contained. And there's also an indication that the dollar is being impacted by commodities prices.
So what does all of that mean as we kick the can down the road for which way interest rates are going to go in the future months?
Well, believe it or not, this morning I spoke to a Westpac trader who said the chances of a rate cut today were about 10%, and they'd gone up from 0% to 10%. And in the coming months, so we're looking at August, September, October, November, again, nothing. No changes expected. The governor wants to see the record low rate at 2% to filter through the economy. They want to see more evidence that that historic low rate is actually making a difference. Traders tell me as well that the next move will be down, and that will probably be, it's fully priced in, if you like, in about May next year.
Next year?
Next year. Next year. So no rate cut, no rate rise anytime soon, and a rate cut early next year. What do the markets make of that? Well, looking at the markets now, a brief dip into the red at the open of trade. The ASX 200 now, though, is up 0.4%, while the All Ords is up a similar amount. Resources stocks are a drag on the market today. Suncorp is doing well, more on that shortly. And healthcare company CSL has now pushed past the $100 mark. Asian markets are in the red. Shanghai's composite, though, that's actually rallying. Wall Street closed lower as global oil prices fell further overnight. The Dow Jones Industrial Average lost 0.5%, while the S&P 500 fell 0.3%. Gold is down again in Asian trade, while Tapis crude is sitting at around about $52 US a barrel. And as I just mentioned, the Australian dollar there sitting actually now at 73.5 US cents, so it's rallying on no change. The latest figures from the ABS show retail sales rose 0.7% in June, following a rise of 0.4% in May. There were rises in household goods retailing, other retailing, cafes, restaurants and takeaway food services. Food and clothing, though, didn't fare as well. New South Wales was the best performing state, while Tasmania was largely unchanged. Online retail turnover contributed just 3.3% to total retail turnover. Suncorp Group has posted earnings of $1.13 billion for the year to June. The better result came despite the fact the insurer recorded its worst year of natural disaster claims. Suncorp will pay investors a special dividend of 12 cents per share and a final dividend of 38 cents. Despite the strong result, Suncorp's CFO, Steve Johnson, says the company now needs to focus on generating profit through revenue rather than just cost cutting.
We've been very focused on our expense base over the past 5 years. There's been a lot of legacy issues that we've been unwinding, and that's been running through the profit line. We have to kick up revenue growth over the next 3 to 5 years because you can't go on doing that forever. And some of the low revenue growth we've seen this year has been economy-wide. So it's been a tough year in the economy, and our business reflects that stress and that pressure. So we're confident that over time our revenue performance will improve and our expense program will continue on the way through to make sure that we can continue to deliver these outcomes for shareholders.
And that's all for now, but Alicia Barry will be back with The Business in a bit over an hour from now, guys.
Okay, DT, see you soon.
Thank you, David. DT, I like that.
Isn't it good?
Yeah.
SB.
It sounds very financial. ASX DT. Time for the weather now with GC.